That reversal of fortunes, we're talking about U.S. stocks shedding about, what, $5 trillion in value. We have the NASDAQ down 5% and Dow 900 points low. I mean, how are you making sense of what we're seeing in the markets right now?
Well, I'm not joining the panic. The S&P 500 is down 8.6% from its February 19th peak. So it wasn't that far back that it actually hit a record high. And if you look at the 11 sectors of the S&P 500, only one of them, that's consumer discretionary, is actually in correction territory, which is pretty impressive considering that the Magnificent Seven are down 16% from the February 19th stock market high. So I think the market's actually held up remarkably well in the face of the major correction in the Magnificent Seven. And so I'm not giving up on American exceptionalism. I think what's happening is a lot of the technological innovations that have driven the Magnificent Seven are now actually benefiting the productivity of the S&P 493.
If U.S. exceptionalism is on pause, how long is this pause, you think?
I don't think it's going to be very long. I think right now we had some very overvalued Magnificent Seven stocks. They were selling at a forward PE of 30 a few weeks ago, and now they're down to 26, maybe 25. So we've had a significant correction in the valuation multiple, but these are still great companies. You know, a lot of them are cloud companies. There's still a tremendous demand for cloud, and that's only going to increase with artificial intelligence. So this idea that they're spending all this money on data centers and it's not necessary, I think that flies in the face of the fact that they've got tremendous demand from customers to do more computing on the cloud and more storage on the cloud.
The thing is, Ed, despite your optimism that, you know, U.S. exceptionalism is possibly on pause, there's data out there suggesting that the U.S. economy is weakening. That can be seen from the latest data. And of course, when you take a look at U.S. policy uncertainty, that is at the highest level in 25 years. So surely that may have an impact on sentiment.
Well, there's a really high noise to signal ratio in the economic data, just the way there is in the political realm these days. But for example, we all are familiar with the Atlanta Fed's tracking model for GDP, and that now shows a decline of about 2.5%. And that was after showing an increase of about 2.5% only a few days ago, actually. A lot of that had to do with this bizarre surge in imports during January, and everybody thought that was companies front-running tariffs. Some of that was what was happening, but they were also front-running tariffs on gold bars. I mean, there was a huge imports of gold bars during January, and that's not something that's going to be sustainable, or that's going to, I think that's going to be reversed in February and March. Also, we had the coldest January since 1988. And as a result of that, retail sales declined sharply, as did overall consumer spending. And I think that's going to be reversed in February and March, and we'll see consumer spending make a nice comeback. And the same thing goes for employment. Employment growth did slow in January and February, but I think it's going to make a big comeback in March and April.
It does seem like investors are cutting exposure to U.S. stocks. Is this a buying opportunity if you're looking at a longer-term time frame, if your risk appetite is higher than most people? What are you doing right now?
Well, look, in my opinion, the jury's still out on whether these stimulus programs that the Chinese government has put together to boost consumption, and whether the German program to improve German industry, I think the jury really is out on whether these things are going to be successful. I mean, I think we know that given the American attitude towards defending Europe, that a lot of spending is going to go on defense, and I guess that can be stimulative, but it's not really going to make Europe suddenly an economic powerhouse. Europe really lacks a capital market that is as vibrant as the American capital market, that's constantly providing financing for new ventures, for new technologies. And China has a rapidly aging demographic profile, and I don't think they're going to be able to stimulate their consumers. So I think, yeah, the stock markets in Germany and China have had a nice run here, but I think they're going to kind of fizzle out once these realities come into better focus. And I think, meanwhile, the U.S. economy is going to turn out to be remarkably resilient in the face of what we're seeing as a lot of chaos and confusion coming out of Trump 2.0. But I think the economy handled the tightening of monetary policy in the U.S. remarkably well over the past 3 years, and I think that's going to continue to be the case. So I think there's tremendous value here in the Magnificent Seven and a lot of technology names, semiconductor names. I think those names are going to turn out to be good values. I think this is a buying opportunity and not a reason to panic out of U.S. stocks or to greatly change asset allocation away from the U.S. Towards either China, India, or Germany or France.
So, Ed, is Citi wrong? Citi downgraded the U.S., upgraded China to overweight.
Nobody's wrong in this business. Everybody has an opinion. That's all there is to it. You know, I mean, at the end of the day, the market tells you whether you're right or wrong. So nobody knows right now who's right, who's wrong. I guess we can come back in 6 months or 12 months or whatever time period. But look, China's been a frustrating market for a long time. It's been a tremendous underperformer for a long time. And I don't see that there's anything radically changing in that regard. And, you know, the Europeans just really totally botched up the transition, transition from fossil fuels to clean energy. The clean energy doesn't work. It's not reliable. They are going to be extremely dependent on natural gas from the United States. And they also have a geriatric population. And on top of all that, there's a lot of social tension between immigrants that just aren't really melting into the societies over there. So I'm not that impressed by what's going on over there. And you know, sure, they're going to spend more money, but I don't know that it's going to work.